Good evening, everyone. From everywhere you might be listening to me. My name is Ebenezer. You call me Mr. Ebenezer. We'll be taking you through the corporate reporting of the professional level of Ican. I expect that we're going to hear ourselves well tonight. Then I hope that the network will not be a glitch in any way. Well, quickly, I've introduced myself, and I would like to hear from one or two of you. If you can hear me, and if you cannot, just let's go on. What we are going to look at under corporate reporting, the syllabus content is all about you being able to familiarize yourself with about 19 IAS, and then 17 IFRS, and then there is a non-GAAP standards, that is the Statement of Accounting Standard, which is not in conflict with IFRS or IAS, but then International Accounting Standard Board have not given an express IAS to it, and that is a SCS 32 statement for not for profit organization. They have not issued a standard, and so Nigeria is still using SCS 32 for not for profit entities. And so quickly, I've sent this to the platforms, WhatsApp platform. You can go through it, check through it, and be sure of what you are to cover for this diet. It is expected that you should familiarize yourself with these standards. All of your questions that you will be seeing in your exams cannot come outside of all of these standards put together. Like I said, we have 19 standards, that is 19 IAS standards, and then we have 17 IFRSs. However, understand that some of these standards and IFRSs, you have considered them in your skill level. So some of them will be skipping through the assuming that you are well grounded in it and from your skill levels. So that is that for that. Don't panic. Like I've always been telling my students, you don't need to panic. Corporate report is one of the most seamless and the most very simple to pass. Just follow me and I will take you through. So quickly, let's go to the course modules. All of these standards and IFRSs have been able to break them down into course modules, and we are going to look at it under 6 modules as it were. And then we look at Module 1, Regulatory and Conceptual Framework, as well as IS 1, Presentation of Financial Statement, and then IFRS 1, First Adoption of IFRS. And under Module 2, we look at other required relevant standards in the preparation and presentation of Statement of Financial Position, as well as Statement of Profit or Loss and other comprehensive income. After all, why you are even writing exam under corporate reporting is for us to certify that when you get to that market or when you get to the environment where you are needed, you will be able to do well as it were. You will be able to prepare your corporate reporting and then establish facts as is required, analyze them as is appropriate. And that's why you need to be grounded with the relevant standards. Now what I'm saying is this: preparing and presenting statement of financial position and statement of profit or loss is the core of any accountant. If you cannot do that, you are not supposed to be an accountant. You should be able to prepare and present as well as give analysis, and that is what we call report, and that's why it's called corporate reporting. So as an accountant, I'm sure you will grow to that extent that you will be managing corporate positions like the chief financial officer, chief executive officer, chief internal auditor, chief accountant as it were. And then it's expected that you should be able to present and give good narratives to whatever it is that we have in terms of financial position and of profit or loss. Then under the module 3 we look at cash flow, and under module 4 we look at financial statement analysis. Module 5 we look at group account, and then module 6 we look at current developments in and beyond financial reporting. Now let me tell you this for a take. In your exams, this module 1 and 6 you will always see them in your exams. Most often, they are 15 marks or 35 mark questions. In the last diet, when I checked with their exams, that's this November diet 2024, the total marks that came from this module 1 and module 6 is a total of 35 marks, which is a bonus for whoever that is serious. You cannot answer that questions, at least I not have 25 marks. And all that you are looking for is just 25 marks and then you qualify. So please, I will take you through this module 1, and if we have time, we'll look at this module 6. Just in case we're unable to look at this module 6, I want you to run through them by yourself. Between now and the end of the time that we're going to be meeting together, I want you to look at it and have the idea of what it is all about. I wish you well. And so let's move ahead to the next, the first module that we are going to look at, and that is regulatory and conceptual framework, as well as IS1 presentation of financial statement IFRS 1, first time adoption of IFRS. Okay, let's go quickly. We have under the module 1, talking about regulatory and conceptual framework. Under the regulatory and conceptual framework, we are going to break this class into two. We have the regulatory framework and then the conceptual framework. Under the regulatory framework, what is it all about? You see, the way I lecture is I tell you the simple meaning of what it is, the literary meaning of what it is. It sticks to you. You can't forget it even if you do not read. When we talk about regulatory framework, we're only talking about the regulations that guide an accountant in the way they prepare and present financial statement. In other words, they say where there are no rules, there are no sin. So, if there are no regulations, for instance, management accountants or the people that are preparing accounts, as it were, can choose any means that is permissible, and they will just prepare and present whatever it is, and then the users may find it funny, or the users may not be able to use it adequately as it is required. So that's why we need to look at this regulatory framework as an accountant. And so what we are going to be looking at for under this regulatory framework are, what are the sources of this regulation? Why is it important? And who are the bodies that set these regulations? So these three key things are very important. Number one, sources of regulations. Why is it so important? And number three, who are the bodies that are involved in this regulation? So let's move quickly. Number one, sources of regulation are what I categorize as laws of the land. When I talk about laws of the land, I'm talking about laws of where an accountant is situated carrying out his or her duty. An act of parliament, it is called. And so laws are what governs or what establishes the do's and the don'ts of institutions or of the citizens of a country, as it were. So under the laws, for instance, in Nigeria, we have what we call the Common and Life Matter Act. And this is a primary legislation that governs companies in Nigeria. For instance, it is expected that every company in Nigeria must have what we call a registered address. And this registered address must be their head office. And apart from that, it is expected that every company must prepare their annual financial reports. It is very, very important. As long as you are registered, you need to prepare your annual financial report. It is also expected that this report must align with required standards. And apart from that also, they must be analyzed. They must be duly certified for public consumptions. And that is that for that. We also have other laws of the land, like the Financial Reporting Council of Nigeria Act. These are the people that authorize the kind of standards that we use in Nigeria, and then they are also there to provide laws. They are also backed up by the Act of Parliament to institute a quality standard that we can use or we must use in Nigeria. We equally have Banking and Other Financial Institution Act, which governs the bank and other financial institutions. We also have the PENCOM Act, that's for pension. We have PITA, that's the Personal Income Tax Act. We have CITA, Company Income Tax Act, and other laws, that are enacted by the Act of the Parliament. So, very good sources of regulations. What guide an accountant should be familiar with are the laws of the land. And the second one is what we call the accounting standards. Accounting standards, they are basically the guidelines for recognition, measurement, presentation, and disclosure of certain items or the line items on the financial statements. And so therefore, this is also another source of regulations. I'm sure in your skill level, you will have been taught how standards are framed, how it came to be, all of those ones. Just go over them again and revise it. I don't think at this your level they should be asking you any question that relates to that. And that is that for that. So another source of regulation is accounting standard. Like I've mentioned before, in this very level you need to familiarize yourself with minimum of 37 standards. And so that is what will make you to be a grounded corporate reporter. And so that is that for that. Another source of regulation are Security and Exchange Commission rules and regulation. Security and Exchange Commission, they are the one that man the affairs of companies that are listed in Nigerian stock exchange market. So they also have rules and regulations. What is required of a corporate entity, what is required of them for them to do. So therefore also you need to know certain things as regards this Security and Exchange Commission rules and regulations. Then we have professional ethics. And when we talk about professional ethics, we are talking about these institutions that give us guidelines as to what is morally right for you as an accountant to deal in. For instance, Ican as an institute, they give us 5 fundamental principles that guide your morals in the way you conduct yourself as an accountant. Number 1, we have the integrity principle. We have the objectivity principle. Integrity principle talks about you as an accountant, you should have utmost integrity. And number 2, objectivity, you should be objective in your assertions, in your evaluations. Professional competence and due care, you must be well certified to do the job you are doing. And then we have confidentiality. You must have what we call that heart of being able to keep and then severe information. Information should not leak from you. And then lastly, we have the professional behavior principle. It's important that you know all of these. I'm sure you have dealt with it in your skill level. Don't want us to dwell much on this because we have so many things to cover. Run through them. Just a refresher, that's what I'm doing now. Now I'm sure you can go by them and run through them. Equally, we have the fact that it is expected that you should be competent enough and familiarize yourself with this fundamental principle. And apart from this, you need to also understand that even if you have all of these principles embedded in you, they can be threatened. For instance, we have what we call about 5 threat categories that Ican has provided for us. We have the self-interest, self-review threat, familiarity threat, intimidation threat, advocacy threat. All of these threats can come to you in the course of you doing your job as an accountant. And so understand that at this level you need to know what all of this threat is all about, and then you should be able to also give what we call expressions to them. Now let me give you this simple logic. You don't need to cram it. Just know this thing. You see, at this your level now, whatever you are writing or putting down in expression, as long as it is in line with whatever that we know is correct, nobody will mark you wrong. Nobody should mark you wrong. Self-interest threat, you know what that means. If you have, if for instance you have a company A that you are running, or that you are managing as an accountant, and then you are there to do your job maybe as an auditor, and then maybe let's say those companies now, they give loans. You now went there for them to give you loan. That's self-interest too. There is no way they will give you loan. If you are to make correct decision on them, you won't be able to do that. Equally, we have self-review threat. That is, you've been able to, for instance, now you're an accountant, and you're also part of the board of directors. They are making certain decision, and it will favor you. Maybe the decision is to even commit fraud. You know it will favor you. This thing happens. So, for instance, I have a boss that had to resign in one of those places where he was working, and because they wanted to perpetrate the fraud, and then he said he can't join them. He reviewed himself. He knows that it's morally not right, so he had to recuse himself and then resign from that organization. It happens. And what about advocacy? It's also there. You understand? Where you do certain things, and then you felt you have done what is right, but the law will require that you come and give testimony. You have to go if you have the capacity and everything that is required. So all of these are also what you need to familiarize yourself with. Familiarity trait means you are too familiar with the terrain and the job. And that's why I used to advise accountants, when you stay for more than 2 years at a place, you need to move, because you'll be too familiar with the people. And when you are familiar with people, your assertion will not always be correct. There is no way you won't bend the rules to favor certain set of person. And what about intimidation? Where you have the chief executive officer who is telling you that this is what you must do and the likes. All of these things, they are threats to you being able to do well and abide with them, the regulations as it were. So let's quickly move. And the regulatory bodies in Nigeria, we have the Security and Exchange Commission, SEC, Corporate Affairs Commission is there, and then we have Federal Reporting Council of Nigeria. These are the regulatory bodies in Nigeria. We also have accounting and financial reporting standards. All of these ones, you just need to know them, and then that is that for that. So therefore, why is regulation important? And that is what we talk about, the merit of regulation. Number one, it enhances the quality of information. Now, by regulations, the information that are provided on the financial statement are more of quality than quantity. You understand? I'm sure you understand. Right? Okay. So that's number one. Number two, it encourages harmonization. That is, company A and company B within the same industry, they prepare their account according to regulations. And so therefore, you can always, see that everybody is preparing their account in a way and manner that is expected. Number three, it hates comparison, easy comparison. You can compare company A with company B within the same industry. You can do trend analysis, or data analysis of the two companies, compare them, and because they will be well, they will be well equipped with preparing their accounts with required regulations. Another one is that they create access to international finances. Why? Because the way you prepare your account, for instance, in Nigeria, is the same way they prepare it in the UK. The regulations, the accounting standard operational in Nigeria is operational in UK. So you can access funds in UK, and UK government will know fully well that you are preparing your account the same way we are preparing it in Nigeria. And so that is that for that. And then we have another one that it empower quality decision making by the users. They can make quality decisions, and that is that for that. And then what are the merits? The merits, or why has regulation not work well in adoptions, as it were? Why has it not worked well? Number one, we have what we call superiority complex of some nations. For instance, the United States of America, they have not adopted fully the accounting standards and the IFRSs, because they believe that their laws is still superior to all of these general acceptable accounting principle gap. Then we have what we call cultural differences. Some people still believe that the way and manner their culture is situated, it will not make them to fully accept the generally acceptable accounting principle that is gap, that is being operational in most of these countries. A good example is China. China, for instance, now they have adopted certain part of the generally acceptable accounting principles, but then they still prepare their accounts in their own cultural ways. And then we have another one, inadequate fund to adopt these IFRS and standards by some of these small countries of the world. Of course, we have a country like Ethiopia. They have not adopted because they said they don't have the funds. Then another one is a conflict of laws with IFRSs. Of course, there are laws of the land that says that this is how a company should prepare and present its account. Of course, IFRS also give a guidelines as to how this should be prepared. And so there are conflicts between the laws and the IFRS, and you must obey the laws. So therefore, some companies still tend to obey the laws, and then fully they will not align with IFRSs. And then we have lack of strong regulatory bodies in some nations. For instance, we know that in Nigeria we have FRCN, Republic Council of Nigeria, who governs the standard, and then they have been able to help us well and reduce some certain level of window dressing and creative accounting is to some levels. And so that is that for that. So understand this, that everything about regulatory framework is all about this, and then that's all that you need to know. So we see you in the next class under the conceptual framework. Thank you very much for listening. If you have any question, please you can reach out to me in the comment sections. Thank you.